Many thanks for joining me on the marketplace and welcome back. Let's begin it all with some petroleum news updates. The Energy Minister John Peter Amewu has told Joy Business that the government has served notice to more than 15 oil exploration companies to punish or revoke their licenses if they fail to meet the requirements of oil blocks exploration licenses given them. He said this will pave way for government to have these blocks and develop them or give it out to different investors who have interest in working in Ghana. In an interview, John Peter Amewu indicated that some of these licenses will expire before the end of the year.
At the expiration of the exploration period, these blocks, of course, will revert back to government. And the PC is doing a very good job. And we're trying to collate that data. Some of them are ending this year, some early next year. So government is taking up back these blocks, and repackage them for other companies that will be interested. Yeah.
Approximately how many of these companies are we looking at?
A number of them. We're talking at least not less than 15. Not less than 15. Yeah.
Have you communicated with them?
Of course, they are aware, and the contract really spelled out what is expected to be done. And they know that at the end of the exploration period, if they've not achieved their minimum work obligations, nobody is going to go and give them another renewal, of course, because there is nothing to show that they have the capability to execute the job. So why do you allow this speculative nature when they keep on holding on the block? We're not going to allow that.
Mr. Amewu also explains why two international oil giants, BP and ExxonMobil, pulled out from the bidding and licensing round in the Western Bloc.
They pull out of the competitive. What is interesting is that they withdrew. For instance, ExxonMobil withdrew basically on the premises that they wanted to concentrate on what they have now. Already, they have a PA. ExxonMobil, British Petroleum, BP, they want to concentrate in Qatar because they are already negotiating with us on the Qatar. But currently we have about 16 to 18 of them that are moved from the competitive stage to negotiation. What it means is that most of them are more interested in negotiation than also going into a competitive bidding process. And that is why we all gathered here to see what are some of the lapses. I mean, this engagement is very important. You can see the joy in the faces of all the people. It's to be done now as quickly as possible so that we can amend where the differences are and move together, as a country.
Let's move on now to financial matters. And the country's total debt stock has hit 198 billion cedis ending March this year, having witnessed a significant increase over the past 4 months. What is driving the growth in these debt numbers? George Riafi tells us more in this report.
The Bank of Ghana's economic and financial data released last Friday after it met to review the health of the economy showed that from November 2018 to March this year, the debt stock went up by some 22 billion Ghana cedis. The 189 billion debt stock represents about 58% of the total value of the economy. Sources say the increase in the debt stock over the past 4 months can be attributed to the city's recent depreciation, the $3 billion Eurobond, and what sources close to government are describing as exchange losses. On the general economy, total earnings from the exports of gold, cocoa and oil ending April this year stood at $5.3 billion. This was about $1 million down from what we got in the same period in 2017. The country, however, spent $4.1 billion to finance its imports. Our international reserves as at the end of April was $9.3 billion, while the Bank of Ghana puts the city's rate of depreciation against the dollar at around 5.7% as at the end of May this year. On the banking sector, there was a lot to be excited about as deposits and credit to the private sector continue to increase, while loans that the banks fear would not be paid back on time was also going down.
All right, so we'll be getting latest views of an economist on these latest figures, the debt figures of the country. But before then, let's move on to one of our top stories today. The Monetary Policy Committee of the Bank of Ghana has kept its key lending rate unchanged. The committee maintained the rate at 16%, citing some favorable economic and inflation outlook. It is the second time this year that the MPC has left the rate unchanged. Speaking at a news conference a while ago, Governor of the Central Bank, Dr. Ernest Addison, stated the bank is ready to respond depending on prevailing market conditions.
NPL ratio further, banks are working to strengthen their credit risk management practices and loan recovery efforts. Summary and outlook. In sum, the committee observed that global growth has moderated with downward revisions for both advanced and emerging market economies. A slower pace of growth is expected to continue over the first half of 2019, underpinned by escalating trade and geopolitical tensions. Although core inflation remains subdued, global inflation has picked up slightly on the back of higher oil prices. Forecasts show that inflationary pressures are expected to remain contained, influenced by moderate wage growth and concerns about the health of the global economy. The accommodative monetary policy stance by most advanced economies broadly offers some scope for favorable global financing conditions. This could have positive implications for emerging market and frontier economies with strong macro fundamentals as investors search for higher yields. These developments could impact positively on Ghana through the trade and credit channels. On the domestic front, economic growth remains steady and is projected to gain some additional momentum over the horizon, supported by crude oil production. Early indications already show that economic activity in the first quarter is picking up pace, as evidenced by the bank's CIEA. Other factors, such as improving business sentiment and credit growth, are supportive of growth in the outlook.
All right, so we want to get more from our man, George Riafi, who's been covering the event all this morning. He's still at the Bank of Ghana premises where the event ended a while ago. We'll be linking up with him shortly. Now, George, if you can see me, what exactly were the reasons the governor cited for holding the policy rate at 16%?
So we have let's just a little breakdown or trying to connect to the issues very well. Now, the policy rate is the key lending rate or the rate at which the Bank of Ghana lends to commercial banks that will tend to it for any liquidity issues. So they use this policy rate as a measure to try and check the amount of money in circulation. So if you have any concern that going forward there will be issues with inflation or the economy is not going at the rate that you want, you would want to use this rate to do that. Now, the governor is saying that fast forward, trying to project, looking at the crystal ball the next 2 or 3 months, they don't think that the economy might come under any serious pressure where you want to respond by cutting down the rate or even increasing the rate. They've done their extrapolations, they're looking at the outlook, and they believe that things are quite favorable. Therefore, let's still monitor things out there. Let's look at how things will look like before we respond by increasing the rate or reducing the rate. They believe that if you look at the inflation rate, if you look at the economic growth, things might not be under threat. And therefore, let's keep the rate at 16%. Let's observe things and then we'll act.
Now, I believe he might also have been talking about the impending reforms in the microfinance sector. What has he been saying?
Well, you are right on that one, and you recollect that in our reportage, the Joy Business actually talked about the fact that the Finance Ministry has released some almost $1 billion Ghana cedis to help with the cleanup of the microfinance sector as well as the rural banks. Now, what the governor is saying is that they've learned their lessons from what they did with respect to cleaning up the commercial banking space. And therefore, they really want to take their time a little bit doing further engagement with players in the sector before they go ahead and with the process of cleaning up this microfinance space. They've had the money all right, they've done all the engagement, but they believe that they need to do further engagement with players in this space before they go ahead with this action of cleaning the micro and rural banking space.
Now, lastly, before you go, what about the marginal stability of the cedi against the US dollar?
Yeah, you're right on that one. And if you cast your mind back to the Economic Intelligence Unit, their outlook and prediction that the Ghana cedi could come under pressure again this year and even going into next year and even 2023. The governor believes that they have their policies right. They've also been watching this space, and he doesn't think that with this forecast or what the Economic Intelligence Unit is pushing across, that the cedi will come under some pressure will really happen, because they have their measures in place and they believe that what they are doing, they are on the right path, and therefore we won't get there in terms of the cedi getting into another round of sustained depreciation. Yafe.
All right, many thanks for that update, George. We have been reaching us live from the premises of the Bank of Ghana. We also have with us, or we have an economist from the Institute of Social, Economic and Statistical Research at the University of Ghana, Professor Peter Quartey, standing by for some updates on this current development. Prof, now what is your take on this particular decision to maintain the policy rate?
Well, good afternoon to your viewers. I could see you are struggling with a long name. It's the Institute for Statistical, Social and Economic Research, ISE. Yes. The policy rate for me, maintaining the policy rate didn't come as a surprise because if you look at the key variables that the monetary authorities use, that is the central bank, inflation rate, inflation outlook, exchange rate depreciation, GDP growth, all of this have shown relative stability, and therefore you wouldn't expect the central bank to adjust the policy rate. So for me, I think it's in order.
Now, government the governor had also in the past talked about stimulating growth and improving credit. Such actions may not help. What's your take on this?
Can you say that again?
Well, so I was saying that the governor had in the past talked about improving credits. Yes. Now, these things will not help with an increase in the policy rates. What's your take on this?
Yes, we've noticed that the lending rates are sticky downwards. In other words, when the policy rate is increased, you see the banks responding by also adjusting their rates upwards. But when the policy rate comes down or is reduced, you don't see such marginal decline in the bank lending rates. This is also because there are several factors that determine interest rate. It could be the policy rate, it could be cost of credit, or cost of funds, and many others, including default rate. And therefore, you will find that although the central bank moves its policy rate, lending rates don't come down. Also, access to credit doesn't improve as significantly as one would expect. Because if the default rate or the risk environment is high, I would, as a bank, would not lend to risky borrowers. Because, mind you, these are public funds. These are depositors' money that would have to be kept, invested, make returns, and paid back to them as and when they need such funds. And therefore, the policy rate alone will not determine how much credit is put in the system. We need to look at other factors like the cost of doing business, for instance, the credit environment, the risk environment. These are all critical for lending decisions.
All right, now, many thanks. But before you go, do you think we are losing the fight to contain the rising debts, especially with these latest figures being churned out by the Bank of Ghana?
Well, that has been a problem and continues to be a problem. The signal of the condition for us is to look at to what extent are we using the debt? How well have we invested the monies we borrow? That is very critical because we need to channel these funds into investment to yield the needed growth. So if we are borrowing and investing and GDP growth is increasing, our debt GDP ratio will not exceed the threshold. But where we borrow and put into consumption, that is where we have a challenge. The fight against rising debt remains a challenge. I don't think we have won, but we can't stop borrowing because we need these funds to invest to generate the needed jobs.
All right, many thanks for your input. Professor Peter Quartey is an economist with the Institute of Statistical, Social and Economic Research. He's been sharing some thoughts on the latest policy rates as churned out by the Monetary Policy Committee. It's actually maintained the rate at 16%. So we want to stay further on the policy rate. And Philip Namfuri, my colleague, has joined me now to take a look at some declining trends in the policy rate over the past 2 years. Now, Philip, before you even started, what's your take on the latest policy rates?
Well, I think given where inflation was heading, the creeping manner in which it was going up, I think the Bank of Ghana has done a fantastic job holding the rates as where it is. With the governor's speech or comment citing that the threats to inflation are contained, I think is right. We need to monitor carefully in the next 2 months to see what will happen in July come the next Monetary Policy Committee meeting. Right.
Now, let's take a look at the trend. Over the past 2 years, we've had policy rate declining. What does it actually tell us?
Okay, so I would like our viewers and listeners to look. I prepared an infographic to show exactly how the policy rate has come down since 2017, the beginning of the year. Let's take a look at that. January down to April 2019, and we have this rate May. So if we had added it after, we'll see 16%. So you see that from 25.5%, it's come down all the way to 16%. The last MPC was in March, and we have this one in May. Like I said the last time, they meet on a bi-monthly basis. Exactly. So every 2 months we have a change. You can see that they held the rate twice in July and September of 2017. Then in November and January 2018, 17 and 2018, the rate was also held at 20%. Came down again by 200 basis points to 18%. Came down again by 100 basis points to 17%, and was held for 4 consecutive Monetary Policy Committee meetings.
So with all these declines, do we have a corresponding, drop in the, in interest rates?
Fantastic question. So I prepared another infographic that shows the movement of the policy rate vis-a-vis the lending rates. Let's take a look at that too.
So these are the lending rates or the interest rates?
Exactly. So average lending rates by the Bank of Ghana. And you see that January 2017, it was at 31.8%. Okay. It's come down to April 2019 to about 27.67%. Some would argue it's still high, but like the good professor was saying, there's no one-to-one relationship between the monetary policy rate and the lending rates. Previously, banks were using the base rate. And let me go back a bit. Anytime the Bank of Ghana moves the policy rate, it's supposed to affect lending rates, which will affect what you and I are going to borrow from the banks, which will in turn affect the aggregate demand of goods and services in the economy. So its tool is to transmit. That's why there's a use of the word transmission mechanism. But unfortunately, it's not been working with the old base rate. So Bank of Ghana puts in what they called the Ghana reference rate. They together with the Ghana Association of Bankers to see if anytime the policy rate moves, that formula should kick in. Unfortunately, there's been a slow pace because other things hinder the lowering of lending rates in the country. The non-performing loans is one, for example, and other things within the banking industry. Okay. So it's not a given that once the policy rate is going down or being stayed at the same place,
the lending rates will equally go down.
Other factors feed into the lending rates. But you can see that as the policy rate has declined, lending rates on the average have also declined, but at a smaller or marginal pace.
All right. Thank you very much for now. We'll be looking at it more further in our subsequent bulletins. But for now, a sound mind, they say, is in a sound body. But achieving this may not be easy, particularly with a demanding work schedule. So what's the easy way out? Executive Chairman of Pulp Pharmaceuticals Limited, Ernest Kusiabebiu, shares some basic tips to follow to help achieve good health and well-being. Joy Business's Karen Dudu has more.
Today I'm here at Pulp Pharmaceuticals, one of the leading pharmaceutical distribution companies in Ghana. If you've ever been pregnant or you are pregnant, then I'm sure you're familiar with one of their products, Vitafol. As part of our Joy Business Health and Wellness Trade Show, today we've come to the premises to know how exactly they're impacting the Ghanaian health sector. Follow me, let's learn more. Located at North Kaneshie, a suburb of Accra, Pulp Pharmaceuticals has evolved from a small, fast-growing company to a medium-sized company holding a respectable presence in the distribution sector of the pharmaceutical industry. Pulp was established in 1991 as a limited liability company and has since held on to its status. Executive Chairman Ernest Kusiabebiu throws more light on the company's journey so far.
We have some products that we introduce into the country. Time and again, we have been bringing quality yet affordable medications. And one such product that we have introduced is one-touch diabetes testing devices, glucose testing devices. This product was introduced to help diabetics to manage their sugar levels, because one problem that diabetics face is increase in sugar in their blood. But to be able to monitor the increase or the glucose management of these patients require periodic testing of their blood to be sure that they are within manageable range.
With decades of experience in the pharmaceutical industry, I engaged him on some of the challenges undermining the National Health Insurance Scheme. His advice is that governments invest more in the drugs under the scheme.
All right, so for more of these and other health-related matters, make a date on the Joy Business Health and Wellness Trade Show, which opens on the 30th of May to the 1st of June. My name is Emmanuel Apuaji. This is where we draw the curtains down on the market. Please have a good afternoon.